Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. So we're going to get started on the majors here today. Obviously, we got a lot going on today, so let's go ahead and start with the euro. So actually, I'm going to go ahead and cancel my order overnight in the euro dollar. That is canceled. Okay, so the euro dollar. I actually had I had an order to get short the euro dollar as we approach 110. I was hoping that we'd get to 110, and you guys remember the chart from yesterday, right? You remember this chart from yesterday? So we were here. I said, look, we're in the middle of the range, right? Range is about from 110 to, well, 108 or 107. Okay, but we're right here. I said if we get a rally back to 110, and I drew it out for you guys because I leave my drawings for you the next day. We get a rally towards 110. I want to be on the short side. So I was hoping we'd get a little closer to 110 than we did. And as you can see, we moved right up to 109.75, and we reversed. So I didn't get the 110 I was looking for. And I had to order at 109.90. I was looking to get in like up here. I was thinking we might breach some of these highs and just trip some stops, before rolling over. But no can do, and we didn't. So obviously 110 remains resistance. Now 108 is support because that is the 618 retracement as I just removed that fib level, but I'll draw it back for you again. 108.15 is the 618. The horizontal support that comes all the way through here comes in around 108. So 108 is support, 110 is resistance. You have to imagine 110 is still doable. Okay, if you're sitting here going, oh man, I missed 110, I'm never going to see that again. Hell, that's not true. All we need is you have the Dow futures that are down what 300 points right now. Let us be down 450 points today. I can pretty much tell you, if as long as correlations don't change, we'll be at 110. If the Dow is down another 100, 150 points, we'll probably be closer to 110 than we are right now. We're going to probably be back right up here. So I think this is very doable in the near term. And if you look at what we might be developing to, just to keep your eye on it. Not necessarily, this trend line here that you see here, it could be broken very easily. Stocks start to bounce. We could slide right through here and press towards 108. Again, I think 108 is support. But if we can get another move up to 110, I'm going to sell it. I keep some orders overnight, like my, I hope the market gets here type of trade. Like I hope that the euro got to 109.90 so I could have shorted it. I obviously canceled the order already, but canceled the order because I'm now in front of my computer and I can actively, manage a trade should it get up there. But I still think 110, big resistance today. And one of the reasons why it becomes such big resistance, just so you know, is if you go over to a weekly or daily chart, daily is probably a little bit better, you can see down sloping trend line comes in right at 110 as well. So any move up to 110 today, and I am a seller, plain and simple. Okay, and support today I still think comes in at 108, but I am going to write down support right now at 108.80. Okay, just in case we get down there. This is trend line support. I think we should respect it for now, but I'm going to put down 1.08 and 1.0880 as levels of support, and we are in a range. Okay, we're in a range. Let's go over to the cable. So I do have a cable long. My cost average is 142.25. It's a small position. I'm sitting in it. The reason why I'm long now is because I feel that and I'm going to say this again because I know some of you weren't here when I said it originally. First of all, technically, Steve Bealby brought up a couple charts yesterday, 127% extensions, both of them, they reside right here. Plus we have our, big support from 2010 at 142.20, 422.25. That's all right, and we overshot it, but when you are at major weekly fib levels, overshoots are typical. If you're looking at hourlies, and you might get an overshoot of 10 or 20 pips. When you're looking at a weekly chart, you might get an overshoot of 100, 150 pips. It's pretty normal. So especially when you have a confluence, okay, you have this confluence of support right through here. You guys can all see it. 127% extension, low, high, low, high. Okay, so from here to here, 127% extension, 127% extension from here. Then you got your horizontal support that goes back to 2010. All right, now for those of you that have been listening in for the last 6 months, you guys know that I've been a very big advocate of there's no way in hell the Bank of England is going to there's no way the Bank of England was going to raise rates with the Fed. There's just no way. There's too much uncertainty surrounding a possible Brexit, not saying there's going to be one, a possible Brexit going into 2007 or 2016. So as we get into the beginning of 2016, the Fed starts raising rates, which this is a conversation we had like 5-6 months ago or 4 months ago. You would saying there's no way, because you're going to be getting way too close to the Bank of England, or the possibility that the UK could even have a remote possibility of leaving the EU. The Bank of England's not going to rock the boat and start raising rates ahead of that. So, if anybody who thought the Bank of England was going to raise rates in 2016, they had to push all their expectations back to beginning of 2017, late 2016, which has now happened. Now, we had this conversation several months ago and continued down that road, but what we saw is the cable price in that. But Mark Carney yesterday, he said, now is not the right time to raise rates. Well, no duh. Okay, so now the market's already priced it all in. So now that the market knows right now is not the right time to raise rates, it already priced it in for the last 4 months. Now that leaves the potential of at least a stabilization of the cable, if not, a bounce. And I'm hoping for a bounce, but worst case scenario, I'm thinking here, we might dip below 141, but we'll probably be bouncing back to 145 eventually. I think it's possible, and I think the pound's been oversold. Not even just against the dollar. I think it's you can play the euro pound to the short side back to 75 pence. You can play like a pound Aussie bounce or a pound New Zealand bounce. Those are the types of trades that I think you can do. All right, you don't have to actually play the dollar. If it makes you uncomfortable shorting the dollar, I get it. So don't. Trade the cable on the long side somewhere else through some sort of cross rate. But anyway, I think major support is going to be the overnight lows. You can see that we are brushing the lows right now. Here's the hourlies. So 141.25, and in order for the pound really to show some sort of bounce, we got to get all the way back up here. I mean, this has to happen. We have to get above this 142.25. Remember, that's the low from 2010. So 141.25, 142.25, 141.25. Key support, but key resistance, and that's why I put the asterisk there, is 42.25. Okay, we are in a bearish trend. I understand I'm trading counter trend by being long some cable right now, but it's okay. I'll trade counter trend every once in a while, especially when I have really good really good couple weeks of the quarter. This last couple of weeks, I can afford to take on a little bit of risk. And that might be the difference between where I'm at and you're at, okay? Because not everybody had a great, beginning of the year or whatever. All right, here's the dollar Swiss. Okay, so the dollar Swiss, you can see that. Okay, I'm gonna mark up a couple of things. Let me delete this first of all. I'm gonna delete some of this stuff, and I'm gonna redraw it. All right, so let's get rid of this fib. We're gonna get rid of this fib, and let's talk about this for a second. Let's remove that line. Let's remove this line. Okay, so here we are on the Swissy. Okay, so everybody knows, everybody knows with the dollar Swiss, the rejection here at the 618 was big at 101.20, right? 101.20, big rejection, right? Then, and then, and then we had a pullback from here, from the low to the high, to the 786, low to the high to the 618, okay? Fibs have been holding really well. Now, what you're going to notice here is the consolidation that's going on. Now, the great news is, when you're talking about the Swissy, this consolidation is now setting up the potential for a trade. Now, take a look at this, okay? Look at that consolidation. Now, you guys know I don't buy Swiss francs. I don't. The Bank of Canada Swiss National Bank has made it impossible for me to buy the Swiss franc because I don't like the overnight interest. It's not because I don't like the overnight interest. It's more because I know institutional traders won't like the overnight interest. So anybody who buys a Swiss franc won't do it for a longer period of time. If I'm swing trading something, I don't want to expose myself that way because no one wants to hold Swiss francs unless it's a bit of risk aversion, but that's going to be, near term, quick, and then they'll get out as quickly as possible because the rates are, when you have negative rates like that at 3/4 basis point, it hurts if you try to hold it for any length of time, especially as an institution trying to hold a bigger position. So for me, what I'm more interested in is an upside break. But if it gets a downside break, I have to respect the fact that price can break lower. So if it gets a downside break, then I'll just be looking to, buy some sort of dip if possible, okay, or whenever I see fit. Sorry, I tried to get rid of the pink line. That was an accident. Now, if we get an upside break, that'll be different. If we get an upside break, that'll be great. But for now, I think we need to respect the tight range that we're developing. I think it's a really tight trading range, and it's a triangle that must be respected. 99.90, 1.0075. I think those are your levels right now. 0.9990. And if it breaks lower, it breaks lower. I'll look at it as an opportunity to buy it closer to 99 cents if I can get it. 1.0075. Okay, we are in a range, but man, we have a nice setup. This is a nice setup. This is a nice setup, especially if you can be on the long side. If it can break higher, I would be happy with that. I really would. All right, let's look at the U.S. dollar Japanese yen. Now we talked about the yen already. A pretty good length. I'm going to just give you the highlights if you're tuning in a little bit late as far as the dollar yen goes. We have a big head and shoulder pattern, huge. And like I said, I made my whole quarter. I really made my whole quarter the first week of the year when I was short all the yen pairs. And the dollar yen went from like 120.5 to like 118.20 or whatever it did, that first week when it dropped right here. I was short. Well, I've been short for weeks, but I got out, as we got down here. And so I took advantage of that move with all the yen pairs, and it's been, it was great. But my problem has been, as you all know, especially if you listen here every day, I've been trying to get short more, well, buy yen, but get short yen pairs on a move back towards 120. Problem is that just hasn't happened. We haven't been able to get any type of lift. I'm hoping that today's move, especially that move down towards 116 and the BOJ, opened their big yap, said they're watching FX prices. Thank you guys for the update, because I was asleep at that point. You know, I hope that creates a move back up towards 118. I think we may have to settle. Well, I know I might have to settle. I might have to settle for a move back to 118 to get short some of the yen pairs. But I think the 116 to 118, that's your range. And you guys know there's so much support down here. And I have told you that if we break through 115, I think a move to 105 is very doable. Like, very doable. And I'm hoping that this does not happen without me. You know, like I said, I hope I can buy some yen before that happens. I think this is more of a, it's more of a, not a question of if, I think it's more of a question of when. You know, when do we crack that support? I just hope that it just doesn't happen while I'm not in the position. Okay, so 116 and 118, I think that's the range. It is a wide range, and I'm, you know, it's an extremely wide range, but I'm telling you guys, this is the volatility that we're seeing here in equities. You know, the volatility that we're seeing in equities, you have to respect the fact that things are moving bigger than normal, wider than normal. That means one thing and one thing only to you, which should be extremely important for all of you, is when you're trading and you know the ranges are wide, you know that we're moving at 200 pip clips, you should be trading much smaller than you normally do. Okay, that from a risk assessment standpoint for yourself, you must understand that we are trading in very wild ranges. My positioning has been, and I tell you guys every day, I'm trading in like third size positions than normal because I'm compensating for massive moves. You know, the only full size position I have is the Aussie New Zealand, and I think that's because the Aussie New Zealand, I'm not worried about, you know, I'm not worried about 400 pip swings in the Aussie New Zealand because it's more of a cross rate that's, I don't think there's going to be huge divergence in those two economies, not big enough to really move the needle. But yeah, when you're talking dollar pairs, you're talking Canadian pairs, you're talking you know, yen pairs, you guys should be trading in smaller positions because the moves are so wild. Okay, enough about that. I just, you know, I need to say my piece about risk because I know a lot of this is the type of environment that if you're not careful, you can knock yourself out of the business. Okay, you can. All right, let's take the dollar Canadian. I still have a short position in the dollar Canadian. I actually reduced my position size yesterday afternoon due to the BOC, but we hit the 786 retracement on the weekly chart. Okay, the weekly chart. I didn't think we'd make it up here ahead of the BOC. I thought we'd stall ahead of it, but that means the highs today are very important. 146.90. Okay. It is still in a very bullish trend. I think that the Bank of Canada, a cut has already been priced in. And matter of fact, I think most market participants believe that the Bank of Canada will talk at some length about quantitative easing. That's because Paul has already mentioned it before. Okay. Now, Mark Chandler, I read his piece yesterday, and he said something was rather interesting, and I didn't even think about it. Mark said, you know, it is possible that the Bank of Canada starts a quantitative easing program even while rates are at half a basis point, just like the Bank of England did. And then if you think about it, who was the central bank head of the Bank of England when the Bank of England first did quantitative easing? who was the Bank of England head? Carney, right? So Carney is now the head. You know, Carney. You know, it's totally possible. It's totally possible that, you know, Carney, coming from the, you know, the Bank of Canada originally. Okay, Carney wasn't when the Bank of England originally started that. I think it was whoever was the previous. But but the thing is yeah, it was King at the time. Thank you. Uh, but the thing is Polas, okay, Polas could potentially take a out of the playbook from the Bank of England, which I think the possibility is there, and I don't know if that's necessarily going to happen. And I don't think what's right for I'm not a big believer in monetary policy. One size fits all. If it was good enough for the Bank of England, it's good enough for the Bank of Canada. There's obviously a lot of differences between the two economies, and there's Canada's also got a somewhat frothy housing market too. So you don't want to add fuel to that fire either. So I don't know if the Bank of Canada is necessarily going to unleash a round of quantitative easing at this stage in the game, but I believe that they could still talk about it and threaten it, because they're more worried about a recession in Canada than anything, and they're worried about growth, which I do think is a bigger issue facing Canada, especially with energy prices as low as they are. Anyway, the point I'm trying to make with the U.S. dollar Canadian is I think a lot of it's been priced in. Unless they just start with a full-on quantitative easing program today, I think the buy the rumor, sell the news might be a potential risk for the Canadian. Now, I would put in support here. Let's stop here for a second. I was going to say I put in support at 146, right through here. But really, I think support is right here. Okay, this is where this is the hourly chart. Let's extend this out. Okay. All right. So there's your, that's your upward sloping channel on the hourly. Okay. So you gotta respect this channel because it's been pretty good to us thus far. All right. That means that support really comes in today around 145.30 ish. Let me that spike low right there, that's probably going to be more right there. Yeah, 145. 45.40. I think that's really where, and that's about 100 pips from where we're at. That's where really key support's going to come in. 145.40. All right. Now, if that breaks, then the Canadian will probably set up a pretty mean daily reversal candle. If we reverse all the way back down to here, that's going to give us a reversal candle, and it's gonna look like a shooting star. So so follow the channel. I think the channel is going to be really important today in the dollar Canadian. But the BOC decision is very important. That's at 10 o'clock. All right, so when I come back from break, we're going to go over the Kiwi, the Aussie dollar index, Peso, go into the Nordic currencies, Norwegian krona, Swedish krona, et cetera, et cetera. We'll take a look at the emerging market currencies as well. All right, don't go anywhere. I'll be back in just a few minutes. Thanks, everybody, for being here. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. We are going to continue on with, going over the Kiwi. So let's take a look at the Kiwi dollar. All right, so the Kiwi got smashed yesterday following the CPI data. Inflation came in super weak. I mean, the market was looking for negative 0.3%. It came in at negative 0.5%. And it ended up being a really big reversal from that 65-cent level. So we were talking about the potential of an inverted head and shoulder pattern should it break 65 cents. Well, it didn't. And I'm happy. Like I said, yesterday, I was prepared for an inverted head and shoulder pattern, but I'd be happy if it didn't, because it helped my Aussie New Zealand. If you're long the Aussie New Zealand, it obviously is helped that case. The Kiwi dollar came under some intense pressure, so we actually broke into new trend lows, and that opens up the door now for the Kiwi dollar to actually test like the 62 cent level, possibly. As long as we stay below at this stage in the game, as long as we stay below 65 cents, it's going to be really tough for the Kiwi to make any type of recovery. And I have to imagine there's probably people looking to sell on the strength at this point as well. Where would some selling emerge? I would have to imagine now this previous support right here will act as current resistance on any rally, on any significant rally. So we're at 63.60, so any move back to 64 and a quarter, I'm assuming there's going to be sellers there. We're still, as much as I don't want to put range, we're still in a longer term range. I mean, you look at the daily chart, we're, in a range environment. We're drifting lower, but we're still, we've been down here before. All right. Unlike the Aussie that's, putting in new trend lows, the Kiwi really is still range bound. I could argue that the Kiwi is, in a very bearish territory and it's going to continue lower. But I think technically we just have to still say it's more or less in a range. Support. Now, support's going to be more of a trickier subject, because what we'll probably have to do is do some sort of extension from like this last consolidation phase. All right, so if you go from low to high, we're at the 127% extension right now. The 161% extension takes us to 63 cents even. So 63 cents, I would think it'd be the next stopping point on the way down. Okay. Let's go over to the Aussie. Now the Aussie, obviously succumbed to the weakness of the equity markets. Oh, I'm going to sneeze. Hold on. You guys didn't need to hear that. Whew. Okay. The Aussie dollar actually succumbed to the weakness of the equity markets overnight. As the equity markets globally pushed lower, the Aussie, struggled. It's this whole, sell zone, here. I mean, that's, obviously giving us issues on the way back up. So for right now, resistance, and I'm going to actually expand this out a little bit just so we can, know exactly where we're at. Resistance right now is 69.60, and support is obviously 68.25. All right, we even spiked down there overnight. I mean, we went that low and then we bounced. All right, so 68.25, and that's going to be pretty key support. And then 69.60, right? 69.60 is resistance. Okay, and we are in a bearish trend with the Aussie. All right, because we're obviously in new trend lows. Let's take a look at the dollar index. All right, that was the ruble, by the way. If you haven't seen the ruble hit new all-time lows, here it is. The ruble getting destroyed. This is one of those things that you have to watch out. This is where a lot of the carry interest was. Sell rubles, buy euro, or sell euro, buy ruble. Excuse me. Sell euro, buy peso. Sell euro, buy South African rand. Whatever. These emerging market currencies are getting destroyed. All right. Let's go to the dollar index. We'll talk about that in a little bit. So here's the dollar index. Let's go over to the 1 hour chart. Okay, and we're very much in a consolidative pattern here. I mean, I guess you could actually argue that we're doing this. I'm actually still more or less concerned with this resistance in general, which comes in at 99.30, support 96.60. You can see how we held that very well yesterday, so I'm just going to extend it out. That actually goes, let's go over to a 4 hour chart. It's actually, comes out further, so you can see that consolidation pattern that we've got. 98.60 is support. $99.30 is resistance. We've got to watch that carefully, because if that breaks, that means the dollar Swiss is probably breaking out too. You know what I mean? So we're in a range in the dollar, but you know, well, threatening to turn pretty bullish here is, you know, we're just in a real strong trend, and we're, you know, wedging our way higher towards key resistance. Okay, let's go into the peso. One of you guys, I saw it briefly in one of your messages to me. Said, "Hey Blake, I just bought the dollar peso, looking for 1850." I'm not sure who wrote that, but let's take a real quick look. So here's the peso. We are in uncharted territory. It's obviously new lows. All right. Here is the big channel we've been. Well, actually, you know what? I drew this yesterday. So you guys didn't see this yesterday. I drew it because I was trying to figure out how high this peso could go. All right. This trend line that you see here, this blue trend line, you guys have known about that trend line for a long time. And if you don't recall that trend line, I can tell you why it's there. Because we talked about it, because there's a certain hedge fund manager out there who flipped his chart upside down when we were right here. He flipped it upside down and said, you know, would you actually be shorting the peso, the Mexican peso, if you saw that chart? And I was looking at the chart and saying, yeah, I'd actually short it. He had it upside down, meaning that I thought it would still continue. And it has. And so, and that hedge fund manager, we've heard nothing about that ever since that tweet. So apparently some people, he assumes that some people forget, but you know, anyway, taking a look at the peso though, I would have to say that we're probably closing in on some pretty key resistance. So if you're out buying the dollar peso right now, and I drew this yesterday because I was like I said, I was trying to figure out where we would stop. And you know, we have a 261% extension up here of you know, one of these extended moves. We had some flag pattern extensions, and I'm like, you know, we're probably getting towards the upper end of, you know, this range. Hey, thanks, Compex Trader. Have a good one. Hey, thanks for the tweet earlier. I appreciate that. Thanks, allowed me to retweet it out. You have a great day too. Sometimes I wish people could stay the whole 2 hours, but I know it's not always possible. Okay, so here we are. 1850, that seems like a bit of a problem, but you know, 18 is holding. So as long as you continue to hold above 18, I feel that we're going to be trending higher. We could be setting some sort of ascending wedge, but looking at this chart here, as we rally, relative strength is divergent. So you see how, you know, we rally into new highs, relative strength is not hitting new highs. That to me suggests that we're probably, you know, we're probably going to pull back again. The question is, will we hold 18 on the way down? Because, and I said this yesterday and I'll say it again today. If we break below 18 in the dollar peso, that suggests that the stock market is actually ready to bounce. To me, it does. Okay. If we can get above the, if we can get above the, you know, back below 18, which means the peso is actually rallying, you know. But for now, I think that 1850 is possible. The high today is 1844.60. Is that really the high today? 1847.50. Okay, 1847.50. I think we can probably just look at 1850. So support's at 18. That's major support, and it's major support because I think we have to really focus on that level on the way down. 1850 I think is doable. I sure as hell wouldn't be buying it up here. I'd buy a pullback versus buying it as it extended its legs up here with relative divergence, relative strength diverging. I'd rather buy it down here than up here, you know. You buy it on sale, not when it's full priced. And right now, I feel it's probably more full price than anything. Let's take a look at the Swedish krona. Swedish krona really is still bouncing around. I'm not too excited about doing. Oh, I skipped the Norwegian krona. Swedish krona is still not really doing anything. The Norwegian krona, I still have a long in the U.S. dollar Norwegian krona, and you can see this. This is captivating prices right now. 890, 876. I think the same numbers we wrote down yesterday. It is bullish. I am trading counter trend, but you notice how it has not broken out, even with crude oil dumpalicious. So that suggests that the U.S. dollar and Norwegian krona is eventually going to roll over here. That divergence between the two. Okay, so there you go. There is your bias chart, and hope you guys have that now. And let's go into some of your questions. I missed a lot of questions, so I'm going to go all the way to the beginning, and I'm going to try to tag some of these longer questions that you've written in.